types of loans and their features that you must know. In this video, you will get a brief note on 5 different types of loans available to general public. I'm sure 90% of you might have subscribed to either one of these loans. So watch till the end and be sure to comment with your queries. I can even answer your questions in my next video. Hello everyone, I'm Rakshit Pai, and in this video, we'll go over 5 different types of loans. Let's get started. Five prominent types of loans. Number 1. Short-term loan. This is the costliest form of loan. Interest rates can range anywhere from 12% to 36% per annum. That's messed up. I'm sorry if any of you have taken such loan. If you have, then please don't think of investing for now. In fact, nothing must come to your mind other than settling the dues first. Because there are very few assets that can give you over 12% return on investment. I say this because your entire focus right now must be on repaying loan, which is costing you over 12% in interest. Also, please be aware of loan sharks. It is illegal, but they are everywhere. To learn more about loan sharks, check out this video. I'll say this again, and it's very important. Don't ever take loan for discretionary expenditures. As far as tax deductions are concerned, short-term loans are loans under 12 months period. These loans are taken for meeting emergency cash requirements, so you have no such tax benefits. And if at all you need to take such a loan, then do this. Number 2. Loan against an asset. What's the use of an asset if it's not aiding us in these difficult times, right? A loan against an asset is when you take loan on your property, mutual fund units, bonds, provident fund, gold, etc. Usually loans secured by an asset have lower interest rates. Remember, suppose you pledge your asset as collateral for a loan, the loan amount could be 70 to 80% of your total asset value. For example, pledging gold worth Rs 1 lakh might give you cash of around 70 to 80,000. That's it. As far as tax deductions are concerned, this is the only one I know. If you have any more information, please let us know in the comment section. So as per section 24B, you can take loan against property. So as per section 24B, you can take loan against your property and claim tax deductions up to Rs 2 lakh. Number 3. Credit card loan. Credit card loans are one of the fastest growing personal loans segment in India, mostly because the 2000 calls we get from our banks. Right? For an introvert like me, only 2 types of people calls. One being asking for credit card and the other one being asking for insurance. Anyway, a credit card is costly. The interest cost is around 24% to as much as 48% per annum. Usually, credit card interest charges are based on the MPR, which stands for monthly percentage rate. Multiply this rate by 12 and you will know what your interest rates are as per your credit card rules. The Indian credit card industry is expanding at a rate of more than 20% per annum. As of 2021, the total spending is estimated to be around 11,500 crores. Even in this case, since credit card spending is considered a luxury item, you won't get any tax benefits. In fact, if you are paying credit card bills over Rs 1 lakh, you are likely to receive a notice from IT department. Number 4. Home loan. Did you know that India's personal loan market is worth over 37,700 crores, out of which almost 50% of the loan is housing loan amounting to Rs 18,250 crores. And that's because we Indians give a lot of consideration to owning a house, right? Now typically speaking, a housing loan is one of the cheapest forms of personal loan, wherein your interest cost is around 6 to 10% and over depending on your credit score, loan amount and loan period, etc. Nowadays, you can get home loan to buy a fully built house or you want to start from scratch. You can even get loans for repair and renovation cost. Usually, housing loans are for periods exceeding 10 years and can be as long as 30 years. As far as tax deductions are concerned, you can claim up to Rs 2 lakh and another Rs 30,000 under section 24, and as per section 80C deductions on the principal amount up to Rs 1.5 lakh. Additional loan interest is deductible under section 80EEA up to Rs 1.5 lakh if you took out loan between April 2019 and March 2022. Number 5. Auto loans. Auto loans are one of the fastest growing personal loan segments in India. with a growth rate of over 20% per annum. I don't know what we'll do with so many cars on road. I mean, think of the metropolitan cities, there's no place for parking. It has become a big issue now. Anyway, your car loan is kind of costly because your car is costly. Did you know that when you buy a car, you pay anywhere from 29 to 30% to nearly 43% in taxes, cess charges and other fees. Whereas for an electric car, you will pay 12% GST, but there are other ways to bear the cost. Car loans are available at around 8 to 10% per annum, and if you default on loan, they have every right to take your car. Also, since a car is a liability, subscribing to a debt to take on liability is not suggested option unless you owning car makes your life easier. I mean, unless absolutely necessary, avoid taking out a vehicle loan. As far as tax deductions are concerned, since car is a luxury item in India, there are no tax breaks for people who buy car for personal use. However, if you own an electric car, you can deduct interest cost up to Rs 1.5 lakh under Section 80EEB. Conclusion: all the loans mentioned are for personal use only. You can get additional tax breaks and other benefits if you take out business loan instead of personal one. And for that, the loan you are taking, like the asset, must be in the name of business. I'll explain them in another video. Also, the rates mentioned in this video can change based on your credit score, your loan period and the amount of loan. One last thing, if you need professional financial advice, consider ET Money Genius. Invest like a genius with ET Money Genius. I hope the video was informative. Now let's see what ET Money Genius is all about. Hi there. Do you take stock tips, invested in them, lost money? Well, instead of repeating the same mistake, earn better returns by subscribing to ET Money Genius. ET Money Genius will understand your risk profile and suggest different investment options for varying time periods, thus helping you build a very well diversified portfolio. High quality stocks that yield better returns are chosen so that you need not wait for years. So what is the expected return? Well, if you had invested as per the ET Money Genius high growth stock strategy for any 7 years in the last 15 years, you would have earned 22.4% CAGR. The wait ends here because with no additional work, you can earn a wonderful return just by subscribing to ET Money Genius membership. Check the link in the description. Thank you for watching.